Welcome back to Fast Market here on the TD Ameritrade Network. It's time for our cash tag segment, so let's bring in our next guest. That's Andy Swan, co-founder at Likefolio. Welcome back to the show, Andy.
Happy Friday.
Happy Friday to you. We're talking Uber. Andy, if you look at the stock price over the last 6-7 months, it seems like Uber's been re-rated as far as the analyst community and investors that, hey, maybe profitability is going to be sustained here. Free cash flow levels really good. What kind of data do you guys have out of Likefolio that kind of supports this massive 83% rally we've seen this year?
Well, the data we have out of Likefolio is really that Uber is the best in its niche by a considerable margin. And if you believe that, eventually these cars don't need drivers to drive them, then the profitability of this company instantly goes up, by 10-fold, 15-fold, from nascent profitability to exceptional profitability once you get rid of the drivers. But until then, it's a battle for the logistics technology. It's a battle for distribution, for getting in people's way in terms of being the app of choice. And we start to see that, pretty consistently over the last couple of years, that when it comes to the Uber versus Lyft battle, that battle looks like it's already been won. Uber, we're seeing significant gains on a year-over-year basis in terms of the number of people talking about installing the Uber app or buying things through Uber or booking a ride through Uber. Their partnerships are growing. This is definitely the company to beat, I think, from a local logistics standpoint. Lyft pretty much seems dead in the water to me. And then, the only other competent competitor that we see at this point is clearly DoorDash, which is doing also a fantastic job of building out their local logistics platform and their distribution without the, kind of bad business or the annoying business of actually having to take people around. I think, Uber's quickly figuring out it's better to take goods and food than people. Drivers like it more. So overall, we think Uber is the long-term winner here. We think they've got a great platform, and it's really more of a bet on self-driving capabilities of vehicles than anything else. If you think that we're 5 years away from that, then Uber becomes really attractive at these prices. If you think we're still 15 to 20 years away from that, then it's vastly overpriced. So it's really just kind of a place your bets kind of stock.
You're right, Andy. I believe that the Uber-Lyft heavyweight battle is now over, and Uber's the clear winner. They're now 8 times bigger, which gives them more cash to spend on things like advertising and research. But, if you look at the one-year chart of Uber, and you see $20.59 is where it was like a year ago today, and this massive rally that got them all the way up to their IPO price, their original IPO price. It took them all this time to get back to there. So there's one little victory, right, that they got. But this is a company, if you put up like a 5-year chart that shows you the high of 64 and change and the lows, what you see across that bottom in terms of earnings is a lot of negatives, a lot of quarters where they lost money, one after another. And so at some point, something's got to give. You're right. I think the momentum is on their side. I think they somehow made it through the pandemic, and all those things are going back up. But the problem, Andy, and put on your CEO hat for our viewers, how do you get this company profitable? Is it the elimination of drivers?
Yeah, I think they can squeak by a profit, once they stop investing in research. So I think they could be profitable really quickly if that was their goal. I think they could stop investing in a lot of the research they're doing, a lot of the advertising that they're doing, and just run on the momentum that they have as being, the #1 ride-sharing app by far, and right up there in terms of food delivery. I think they can run a really nice, profitable business, but I don't think that they're satisfied with that. I don't think they ever have been. It's always been about growth, and it's always been about this vision of having, autonomous vehicles taking people and things all around the country in a, in local fashion that kind of literal last mile of delivery. I think they're nailing that, and I think the technology is getting very, very good. In terms of driverless cars and getting rid of that 30 or 40% of the cost of every ride. I don't know where to place the bet on that. I think, the truth is probably somewhere in between what Elon Musk thinks and what, the naysayers that want complete government regulation think. The truth is probably in the middle there. But once that happens, there's only a couple companies that are ready to take advantage of it, and Uber is definitely one of them.
Yeah, Andy, they just announced a partnership with Domino's. They're going to start delivering through their Uber Eats. It seems more incremental to and helpful to Domino's than it does to Uber. Your thoughts on that? And I know earnings aren't for about 2.5 weeks. Do you have a score for us?
Yeah, I think right now we would have to be slightly bearish on Uber going into this earnings report simply because of the massive run in the stock. Things feel quite a bit extended. We think the company's doing good things, but not that great. In terms of the Domino's partnership, I just think it's just another signal that once Domino's waved the white flag on having their own app, exclusively through their own app, exclusively through their own delivery drivers, that it was Uber that they went with. I think that's more the signal to the market than anything that Domino's chose Uber is probably just another indication that Uber is the company that, Fortune 500 companies can trust and that consumers are becoming really addicted to. So I think that's more the story. I do agree with you that it was better play for Domino's, is long overdue for Domino's, but for Uber, it was just they won and DoorDash lost that deal, and I think that's at least a little bit of a signal to the market.
Yeah, and it also might signal more partnerships coming down the pipeline for Uber Eats also with some of these big brand names. All right, great data. As always, Andy, appreciate it. Have a great weekend.
You too. Thank you.
All right, that's Andy Swan, co-founder at Like.